Welcome! Today, we're doing something a little different. We're not just going to look at numbers on a spreadsheet. We're going to become architects. Because understanding cost, it isn't just about accounting. It's really about designing the entire structure of a successful business. Every single decision, every product, every strategy, it's all built on this foundation of cost. All right, let's dive right in.
So why should you care about any of this? Well, the famous strategist Michael Porter really nails the core idea right here. It's called cost leadership. Now, this isn't about being cheap, not at all. It's about being the smartest, most efficient business in your field. Think about the companies that just dominate their markets, right? They often win because they have totally mastered their costs. That lets them offer fantastic value without ever sacrificing quality. This is the why. It's the whole reason the architect picks up their pencil in the first place, to design a structure that's built to win.
And that brings us perfectly to our first section, why cost is king. And let me be clear, this isn't a topic that's just for the finance geeks. If you want to understand how a business really works, how it survives, and more importantly, how it thrives, this is ground zero.
So, to hit that goal of cost leadership, you can't just hope for the best. You need a plan, a blueprint. And that blueprint, in the business world, is a solid cost and management accounting system. Think of it as the detailed set of drawings that lets a business build itself efficiently, without waste, and with a really clear purpose. It turns that big, abstract goal into a concrete, achievable plan.
Okay, so before any architect can start drawing up that blueprint, they first have to understand the language of their materials, right? What's the difference between concrete and steel? What can they do? Well, in business, our materials are concepts, and we need to be able to speak their language fluently.
Let's start with the most basic word of all, cost. At its absolute core, it's just what you give up to get something else. Yeah, it's the price on the tag, but it's also the hours of your time, the raw materials you use. This is the fundamental currency of every single thing a business does.
So if cost is the noun, then costing is the verb. It's the action. This is the actual process of figuring out what a product's cost really is. It's the work, measuring the materials, counting the hours, and adding it all up to say, okay, this is what it took to make this one thing.
Now we get a little more formal. Cost accounting is the whole system built around that process of costing. It's the official procedure that starts with recording every single cost and ends with creating reports that help managers see what's actually going on. It lets them control those costs and analyze performance. It's like the official logbook for our entire building project.
And this is where it all comes together. Management accounting takes all that data from cost accounting and uses it to look forward. See, it's not just about what we spent yesterday, it's about what we should spend tomorrow. It helps managers make those big strategic calls. Should we add a new feature? Should we use a different supplier? It's the architect using the data to decide the future of the project.
This table puts everything into perspective so well. Over on one side, you've got financial accounting. That's for outsiders, like investors or the government. It's all about looking at the past, and it has to follow super strict rules. But cost and management accounting? That's for the team inside the business. Cost accounting looks at the past and present to figure out what's happening, and then management accounting grabs that info to plan for the future. It's way more flexible, creative, and totally forward-looking.
So, we've got the language down. Now let's take a closer look at the blueprint itself. What is this whole system actually designed to do? What are its main jobs? The blueprint really has 4 main goals. First, just figure out what things cost. Pretty simple. Second, use that info to set prices and see if you're actually making money. Third, and this is so important, to control those costs. And finally, to help management make much smarter decisions. You see how it all connects? You can't control what you don't measure, and you can't make good decisions without good info.
Let's just zoom in on cost control for a second, because it's huge. This is not about randomly cutting spending. It's a discipline. It's about setting a standard, a target, and then making sure your actual spending lines up with that plan. It's proactive, not reactive. It's like the site foreman making sure the builders are following the architect's blueprint down to the inch.
And how does that actually work? Well, it's a simple but really powerful 4-step loop. First, you set a target. Then, you measure what actually happened. Third, you compare the two. And if there's a difference, what we call a variance, you figure out why and you take action. And this isn't a one-and-done thing. It's a continuous cycle of improvement, always fine-tuning the process.
So, we have our blueprint, but what is our building actually made of? What are the fundamental raw materials that make up a cost? Let's break it down.
Turns out, it's surprisingly simple. Every single cost in a business, and I mean everyone, can be broken down into just one of these three elements. You've got the cost of your materials, the steel, the plastic. You have the cost of labor, the people actually doing the work, and then you have, well, everything else, which we just call other expenses. That's it. Every cost you can think of fits into one of these buckets.
Now, within those elements, there is one distinction that is absolutely critical to understand. It's the difference between direct and indirect costs. Think about it like this. If you're building a wooden chair, the cost of the wood for that specific chair is a direct cost. Easy. But what about the electricity that powers the whole workshop? That's an indirect cost. It's essential for making the chair, for sure, but you can't easily say, oh, that chair used exactly 52 cents worth of electricity.
And this brings us to a word you've definitely heard a million times: overheads. Well, overheads are just the official name for the grand total of all those indirect costs. The workshop's rent, the factory manager's salary, the electricity bill, all of it. They're the essential shared expenses of just keeping the lights on and keeping the business running.
Okay, so we've got our building blocks: materials, labor, expenses, and we can sort them into direct and indirect piles. But there's another really important way we need to classify them. We need to understand how these costs behave. Do they just sit there, or do they change when the business gets busier? Let's take a look. Just think about this for a second. If a car factory goes from making 100 cars a day to 200 cars a day, do all of its costs just double? The answer is a big no, and understanding why is the key to understanding cost behavior.
This chart shows the two main types of cost behavior perfectly. On one hand, you have fixed costs. Think of the factory's rent. That bill is the same every month whether you make 1 car or 1,000 cars. It stays flat. But on the other hand, you have variable costs, like the steel used to build the cars. The more cars you make, the more steel you need, so that cost goes up and up in direct proportion to how much you're making.
Of course, in the real world, things are rarely so black and white. You have costs that are a mix of both, and we call these semi-variable. A perfect everyday example is your phone bill. You have that fixed line rental you have to pay every month no matter what, but then you've got variable charges on top based on how many calls you actually make. A ton of business costs work just like this.
So let's recap. We've defined our language, we've examined our blueprint, and we sorted our building blocks. Now, for the final and most important part. How do we use this beautifully designed system to make actual real-world decisions? How does the architect's plan finally come to life?
The most important point here is that you don't use the same tool for every single job. Different industries work in fundamentally different ways, so they need different methods of costing. If you make unique custom furniture, you use job costing to track the cost of each individual order. But if you're a sugar refinery making thousands of tons of the exact same product, you use process costing. A construction company building a bridge, that's contract costing. And a hospital that provides services, that's operating costing. The method has to match the mission.
So, we've gone all the way from a simple idea, cost leadership, to a fully realized system for analysis and control. We've seen that understanding cost really is like being an architect. It's all about design, structure, and purpose. It's about knowing your materials and using the right tools for the job. So I'll leave you with this question. Now that you can see the architecture of cost, what inefficiencies could you design out of a business you know? What part of the blueprint would you change?